Good evening, everyone. Welcome to Hit the Bid. Today is March 30th here on the eve of week 13. Going to be adding a video here to our weekly Hit the Bid levels to recap some of the prior week's action, see what happened, as well as what we need to be on the lookout for in the week ahead as we go into week 13 here. So, going to dive right in here with the live cattle market. June 25 contract on the board. So last week we were expecting a pullback in the cattle market. We were seeing prices rally over the past few weeks up into new all-time highs. This Friday on March 21st saw a nice rejection of 207 and a good reversal signal here, which had us expecting a pullback early last week. We did see that, however, it came up a little short of what we were expecting. I was anticipating price to test this 20-day average down here near that $1.98. Didn't quite get there. We saw, if we look on our lower time frame, the pullback selling action was contained mostly to Monday and the first half of Tuesday. Price dipped down to this $2 mark, briefly undercutting it before rallying throughout the rest of the week, showing good support and lots of strength from the bulls in this market. This Thursday saw a nice $3 gain, pushing this market back above 206 before a nice pause day on Friday. This market remains strong, nice uptrend still intact here. Bulls are in charge. Going into this week, I'd expect to see bids above 206.35 to continue pushing this market higher into new all-time highs. However, if we do get offers below 204.5, pullback to 203 is to be expected. 203 is kind of the area we were seeing support last week, where a bulk of the market participants are positioned at, so that's going to be a key area that we want to watch for any downside. Would expect dips to be bought up in that area. Even if we get lower into these averages, this market remains strong. The uptrend looks good, so would expect to see dips being bought back up. And over the next few weeks and months here, expect to see continued upside in the live cattle market. As we go down the line, looking into some of these back months, we see same story. We did see some of these back months actually get and test their 20-day averages. Relative strength is up here in this front month of June 25, with some of these back months not gaining as much upside, but the picture is still very bullish nonetheless, so expect continued upside throughout the rest of the year at the moment with these live cow futures looking the way they do. So next up we got the feeders. Feeders saw the same thing happen to them. Early sell-off Monday and Tuesday, even with a bit of a dip on Thursday as well. Thursday's action, we saw a quick $4 sell-off to test that 20-day average for a second time. Early Thursday morning, in about the first 30-45 minutes of the day, prices rallied back up and closed in pretty good territory. Pause day on Friday, everything is looking good here, showing good support at this 280 mark for the feeders. I'd expect to see continued upside. Bulls are within spitting distance of that $3 mark here, so going to be expecting them to target that area and push towards that throughout this next leg higher. If we do get offers below 280 here, I'd expect a quick mark down to 275. This 50-day average, we should be finding support here, as well as this prior swing high dating back to the end of February. However, in the meantime, I'd expect just a continued grind higher and more support to push this market up towards $3. Cattle market looks good. Feeders also look good going out into the end of the year with some of these back months of 2025 showing good support, and a continued upside is to be expected. Next up, we got corn. Corn futures saw a good downside last week, about a little over 20 cents between the open on Monday and Friday's low. We did see a nice sell-off early, break at that 456 level, which was a key level in the prior week that really accelerated the selling. Did see price get down and open right around 445 on Friday and test this 442 level. This level has been a key dating back to December, which is kind of where we kicked off this big leg higher throughout the end of 2024 and early 25. but it also was a good support point after we lost all those gains and tested it the first part of, during the first week of the month. So as we can see, 442 has been a good support area for the bulls, just a good battleground. Expect a battle to continue. Bears are still in control at the moment. We've got a nice downtrend shaping up here, but we need to see prices held below 456 to continue working lower, and I want to see the Bears attack this 442 mark and get a close below that. We do have green stocks and prospective plantings scheduled for tomorrow. This is a quarterly report that is sure to bring in some volatility to this market, so wouldn't be surprised to see some wide swings in either direction here. For the bulls, I would need to see a close above 470 and this prior swing high and the 50-day average. If the bulls can get a close above that, that would be about the only time I'd expect sustained upside. So they've got a lot of ground to make up and a lot of work to do before we get too excited about any upside in the corn market. But nice wide range trade is also very possible. Just going to have to reassess once those reports are released, and we can get a better picture for the roadmap from here on out. So, but in the meantime, remain bearish and have a bearish bias on this market going forward. Next up, we have crude oil. Crude oil saw a nice rally last week, and price is testing the $70 mark. This is kind of a key area with these prior lows as well as the 50-day average, just right around this $70 mark. We did see Thursday and Friday start to get some rejection as price opened up at around 70 on both those days, pushing lower. If we get offers below 69.12 to 69 even, I expect the downside to continue and the bears to target the mid-60s once again. Big picture downtrend is still intact, so would expect the bears to continue carrying this thing lower. Offers above 70.22 though could just continue to chop this market sideways like we saw throughout February. So we will reassess if we get there, but in the meantime we are expecting more downside. Expect the bears to be targeting that mid-60s, and if we look over the long term, dating back 4 or 5 years from now, we have seen this 60 to 65 mark support price dating back all the way to 2021. This is going to be a key level going forward. If we get some downside and we continue to break below 65 as well, we could really see the selling accelerate and push down into the 50s and potentially beyond that. So, but in the meantime, just be looking for the next leg lower into the mid-60s, and we will reassess once we get down into that level. Equity markets saw another rough week. Monday we did see follow-through days across the indexes with a nice rally, but just wasn't able to sustain the buying action. The recovery efforts were failed, and late in the week we did see pretty substantial downside pushing lower as we begin the second leg. Resistance stepped in here at some of these prior lows after trading in that range for roughly 3 months throughout the end of 24 and early 25. We did see resistance step in here at those prior lows as well as in our key moving averages. I would expect to see the downside continue if we get the U.S. session to open up tomorrow morning. Below 5,600, I'd expect them to target this prior swing low and potentially beyond that. We are seeing volatility increase the last couple days, and we've got some jobs numbers that are going to be released all week long, so definitely more opportunity for volatility and potential downside. So encourage everyone to remain defensive. The major components of the indexes are all struggling and continue to see downside. Any of the Mag 7 stocks are anywhere between 20 and 50% off of their all-time highs, or recent highs that is. So not a very good picture or environment for equity markets at the moment. There are some sectors that we are seeing some money rotation, mostly mining, precious metals stocks, as well as medical and insurance sectors as well. So there are some areas, but you really have to do some digging to find names that are acting right. So in the meantime, I would encourage everyone to just remain defensive and raise cash as this market continues to see more downside. Would expect that to continue into the week ahead. Each of our indexes are looking the best at the moment, so let's stay safe out there and be ready for another exciting week. Can pull up our economic calendar here. This week we've got some big reports being released all week, mostly manufacturing data early in the week, followed by non-farms, jobless claims, and more payrolls, unemployment rate, with Fed Chair Powell speaking on Friday to close out the week for us. So no doubt some opportunities for volatility. So, and also those grain reports being released tomorrow. So if you're involved in the corn market, be ready for some fireworks tomorrow, noon Eastern. So that's all we got for tonight. Everyone have a good week.